that I just started, so go ahead and watch that so that you can understand why I'm actually redoing this. I'm explaining why I actually took that second trade at the zone that I had planned. If you find this educational, make sure to like, follow, and subscribe, but let's get back into it. So the second trade that I took on gold, I took two trades on gold today. One initial execution that you guys can see the mistake. Go and check that video out. And then the second one, same thesis. Gold is bullish on the daily time frame. How can we tell this? Very, very simply with the current structure. Here you go. You can see daily break of structure to the upside and then with retracement, but we never break structure back down to the downside, right? 4-hour time frame. What do we have? 4-hour time frame is also bullish. Why? This is where we broke 4-hour structure right here. I can just mark it as a change of character so that we're all on the same page, right? And many people would assume that this was a change of character when we actually broke back down below the bodies of this candle. But no, breaks of structure are below the wicks. You'll be far more profitable in the long term if you know that. And with that being said, we move on to the next bit, right? 4 hours bullish, daily is bullish, the hourly is bullish. How do I know that? Simple. Scale down and observe the hourly, right? So what happens on the hourly? I see this extension, at which point I start to say, oh, I just want to see a retracement so that I can go ahead and enter and get the continuation leg of this move, right? My final take profit's all the way up here. I've already hit 2 take profits. And really, the reason why this trade was so simply executed was very simple. It was the fact that when we were in here and I saw this extension, I saw this. I said, look at this. Actually, let me do this properly. Let me draw it from here. I saw this. This was the last extension, right? At which point, me, as a smart trader that I am, I'm thinking, cool, I want to see a retracement below equilibrium. It's nice to see that we have resting liquidity under here from pre-market. Also nice to see that when you scale down to the 5-minute, because most likely us going here will require us to break 15-minute structure, we actually happen to have a perfect demand right here. And the 61.8 is literally right on it. Oh, that's a lot of confluence. See, we're now combining our concepts with other concepts, but that pretty much says the same thing. Equilibrium, price pricing itself efficiently, targeting previous demand, taking out liquidity. All that is in line. And this zone became a highly probable zone, right? At that point, I'm thinking, perfect. I love this zone. It has everything that you could want from a zone. You need to induce liquidity to get there. You need to confuse people and get them to short also to get there. And then finally, what do you have? You also have it at a 61.8, which fibs relatively well, to be honest with you. And what does it also happen to be? It also happens to be the decisional demand zone, because this one right here is the extreme, but this one's the decisional right here. Well, technically speaking, it's not this one, it's more so this one, but I'm not going to get into that right now. This is the key here. This was the decisional right here that caused that break of structure on the higher time frame, which led me to say, okay, decisional demand at 61.8 also requires liquidity to get taken out in order to enter, because we'll have to induce sellers and take out all the buyers, meaning the early buyers, because they would have their stops at the previous 5 or 15-minute low, right? Then you have time-based manipulation right here, right? Why? It's after the 9 a.m. open, meaning you have that 9 a.m. candle that's getting built up here, right? So you naturally want to see that leg down, because you would want a candle that goes down, then a candle that goes back up, right? So that you have that bottom wick and that top wick, and then you have the body, right? You have to imagine all of that. Seeing that all play out makes this zone extremely favorable. Now, all I'm saying is, cool, I'm going to execute if I see a good reaction off of the zone, because the probability that we head on higher from here is very high. And the risk to reward also would be very high. Now, yes, this is not my classic execution, because normally I'd say that I'd probably execute on a retracement into here, which I marked out on another chart, and I'll show you guys how I would normally execute. This is how I used to execute, and pretty much on entry to the zone, scale down to the 1 minute and get that reaction. And the reason why I love this reaction is because I know the fact that, one, people who are trying to buy tried to buy here. Smart money traders thought that this was the inducement move. This is where you had liquidity.